Hey guys, welcome back to the channel. This will be a short video. In an interesting turn of events, what we are now seeing is Sebi is going after algo trading platforms. And it's not just algo trading platforms, they are also talking of generalizing this and taking a large paint approach where they also want to target retail traders and they want to bring in regulations which can influence or impact adversely individual algo traders as well, fundamentally anyone who uses an API. This conversation is not new. It has been in talks from around 2021 sometime, where they have made certain proposals of suggesting two ways where algo trading platforms could come in, write an exam, get some certification, etc. Just want to take a deep dive into this news and see how it impacts us. So if you are from India and you want to be up to date with the regulatory, this is a good video for you. So I'm just going to take money controls article. I've looked across multitude of articles. My best, this is the by far the best article that I could probably end up. Now, first of all, what it says is Sebi is concerned that algo developers promise lofty returns to gullible traders and bypass the regulatory essentially, where they need to register as investment advisors by Sebi. And mis-selling is also a problem. Is this a problem? Yes, absolutely. There's a very limited number of people who still in India who understand how to write softwares and use algo. A majority of traders would still trade discretionary or using chart and stuff. And we'll get into what is algo, etc. So essentially, what is algo trading? It's basically automation of algorithms of strategies that you want to use. So if you want to do something simple as buy something when RSI is over 60 and it's probably below its 52 weeks market price, you could do that. So and buy 100 shares, etc. The like it says, buy 100 shares if say if SBI if the stock market makes a 52-week high or something like that. Any rule. Is it this straightforward? No. The rules can be really, really complex and it really depends on the strategy that you're putting. The code is helping automate it. The code doesn't have the strategy, the rules or the value or the research that you have done into the strategy does. Is this a common practice by market movers, institutional traders, FIIs, DIIs? These people definitely use algos. They are probably they have been using it and will be using it. It's very surprising why SEBI is going after not them and just retail traders. Completely unsure seems a little bit political too. So is it that simple? No. What are the current stock exchange rules for algo trading? Basically, brokers need approval of exchanges to offer algo trading, and they need to inform exchanges about the algo trading strategies and any changes to them if provided by brokers. What brokers actually do is, the retail traders really end up using the APIs which are provided by brokers. So when brokers essentially provide you an API, they are not direct owners of the strategy and they can in turn extend APIs to retail or institutional or smaller players in the market who are building tools for this space. And then the APIs are used to push. What is API? It's essentially a set of application programmable interface. Stands for that. You can use a programming language like Python or Java to code, take your strategy, add the rules, and send it, through the API. Think of it as a way to send the data. Now, do retail traders really do their own strategies? I would think that very few. Uh, there's a lot of different players in the market where strategies are available, which you can buy, you can put your money, invest through them, etc., etc. Uh, am I going to take an example about any of them? No, I don't believe in that. And so, how are these algo trading strategies used by retail traders? Very, very simple. It says offers a desktop application, etc., but not really. The client hands over its login credentials from his brokering to a developer. So basically, when you go to, and I've talked about a lot of these things on my previous video. So basically, you go to a trading platform like Dhan, they'll provide you API. You can take the API, you can take their API keys, which you will give it to a developer. They would write some strategies based on your guidance if you're a trader, and then they'll install that server somewhere and upload it, and that script will be automatically running. That's how it will run. What kind of algo trading strategies exist in the market? Tons. There's ready-made, there's custom-made by clients, there's platforms which completely rely on it. So various of them. Here comes the golden question: what are Sebis concerned? So one of that is many of these algo developers promise lofty returns to gullible traders. Two, algo developers are bypassing rules applicable to registered investment advisors as mandated by regulator. So I think there's some sort of registration required, which I'm not sure. Uh, and it says the developers so far have tried to reach out to Sebi's reach, saying they need not be registered because it's a software that's generating signals. Not really, because yeah, it says not really because the developers are who are creating the signals. So you can't argue that the software is doing something. You have the responsibility for creating that software. Are there any red flags? Absolutely. This industry is really full of uh, promises of making short money. And when I started this journey of sharing what I've learned in this space online, I realized that very quickly. So I fundamentally stay very away from this. But there's huge misselling. There's huge content online where people give you tips, tricks, tell you strategies, ask you to join WhatsApp groups, Telegrams. By the way, we also have a WhatsApp group called QuantLab. It has nothing related to strategies or stocks. We purely talk from an educational perspective. So if you are interested in this content, please join. Also, if you're listening to me first time, I talk a lot about quantitative trading, algo trading, quantitative finance, financial engineering, AI, ML, how it is used in this space essentially. So feel free to subscribe to my channel. You will love it. With that, let's get back. Yes. Mis-selling is a big problem. So that's fundamentally there. There's a lot of fees that are charged, and most people don't realize it. If somebody is saying that you'll make 10% gain and charging you some fees for it, uh, don't fall for that trap. Or even 15% gain, don't fall for the trap, because post your brokerages and the fees that you pay to these guys, it will be probably very less. So it's not a worthy exercise to end up on these platforms unless they are really proven. The other part of this conversation is strategies are something which really are not perpetual. So you need to be on a constant hunt for them. So there isn't a strategy which everybody can use. So if everybody knows that strategy, the effectiveness of the strategy goes away. Hence, these are very limited conversations, and hence you should understand and question it. Yeah. Do brokers benefit from algo trading by their clients? Absolutely. There, some brokers charge for APIs. Some brokers have a different model for APIs. Some brokers do get it for free. Their game is that if people use their APIs, their platform is being used. So yeah, definitely brokers do gain from it. Are there any systematic risks? Absolutely. It's a software system and it can sometimes go haywire. And if there are significant price fluctuations, or if you are operating typically in a very fast time window, you might cause slippages and you might miss signals and lose money. So what SEBI is proposing is that brokers offer open API only to clients where the broker can be sure if it is used for algo trade or non-algo trades. Basically saying SEBI wants to be aware who's using their API and for what purpose. It's a very, very downward thinking approach, if you ask me, because APIs are literally running the tech world. Everything is API powered in today's modern world, from banking to finance, everything, right? When you want to regulate it that at that large extent, it's very, 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 very downward thinking, in my opinion. How will this help? So basically, brokers will then be only able to work with people who publish their algos to the broker platform, and through this, the regulator might come to this. What will lead to this is the broker might have to spend enough time or large time to validate those strategies or vet it out, and this might increase the cost for broker to offer the API, so the charges for the API would go up, which will deter people to use algos. That's one side of it. The second side of the problem would be that as you go and the brokers might even stop offering these APIs because they it will be too much of it for them. And honestly, I don't know how they'll manage so much of every retail individual person trying to learn and do some algo trading. So yeah, backtesting results will have to be endorsed by independent performance validation agency. This is asking too much, right? If I'm a retail trader, I trade in couple of lakhs and I've figured out a strategy, or I'm just looking to automate my life. I don't think Sebi should end up in the state where I have to explain everything to Sebi for a few lakhs. Are there some global rules? Yes, in US there is rule regarding algorithmic trading developers to register as securities traders. This move was aimed at reducing market manipulation. I have no idea if it's that huge in India. In UK, it's slightly different. At this stage, it's not very clear as to what will happen. What is likely to happen is in the next few months, SEBI will come out of a deeper regulation and they will probably bring out the rules and regulations. And once that happens, the whole tide of smaller companies which used to sell strategies, offer strategy as a marketplace, and I know a lot of them. I'm not sure what will happen to their business model. Also, if I want to try to learn to algo trade, it just makes my life much more difficult. I will probably go back to defaulting automating the analysis bit of it, but again, getting the data is a huge problem without having broker APIs which really provide you real-time data. So yeah, that's it. This is a very interesting space from a regulatory perspective. Please do stay tuned into it. We'll definitely come back to it. All right, thanks for listening. If you've stayed for long, keep watching. Bye bye.